Swarup Mohanty is here with me today to talk more about markets. Mirae, MD CEO of Mirae Funds. Swarup, afternoon. Swarup, first of all, I'd like to understand today. I think the SIP data is also due, and there's a fear in the market that because of this volatility, there may be some amount of pullback of flows from the retail guys, and probably that is why there were reports also coming that many funds in the market have elevated cash levels now, if not to sell, at least to be able to kind of honor the redemption if they arise. Have you also done the same? And what are your thoughts on, what are your expectations? Another record high, or it could see a dip?
Ajay, as a policy, we are a fully invested fund. We believe that the asset allocation happens at the investor or the distributor or the advisor's end. Once the money is given to us to invest in an asset class, we buy the asset class. So for us, 2 to 3% cash is a lot of cash. No, we've not seen net sales negative for quite some time. This is because of what you're referring to is the large SIP book which the industry carries, and we do carry a fair amount of SIPs within ourselves in excess of 850 crores per month. That really helps the flows when you put it in perspective. When you look at the granular level of the SIPs in the market, it is very difficult to sort of stop all of this together. So if there could be a slowdown due to the markets being wherever they are for the last 1.5 years. But I don't see any dramatic change in the behavior of SIPs, at least in India. It has become the go-to investing solution to investors, and I see that consistently on the uptake rather than any reversal of that. The cash calls are a function of fund manager call. At our end, we don't take cash calls.
So, what are your thoughts on hypothesis which you may be discussing with your team and hence also conveying to your investor fraternity on the trajectory of rates or even the trajectory of inflation in the next 6 months? Do you see picking out?
No, Ajay, everything changed with the recent change in the interest rate behavior of the US. I mean, let's face it, 3 months ago, we had broadly concluded that interest rates had peaked out. And now when we are looking at a slim possibility of US interest rates going to 6%, we are back to the drawing board and everything changes from here. We continue with the basic thought that in an interest rate rising sort of regime, it is very difficult for equities to get re-rated. And that is how it will play out for the next 6-8 months. And there is no quick fix to it at this moment. Global data is extremely fragile, and we have to keep a watch on that. And any small blip on that, and especially on US data, will impact the global market. There is no doubt or debate on that. Now, when you look at what's unfolding here for us is a different story. Of course, Indian markets are very different because the Indian data points are very different. Our data points are completely isolated from the world, and that's why we remain very different at this moment from a market perspective. So when we look at what we tell investors or what we look at it from our investing perspective, these are great accumulation times, and these are great times when you'll get good businesses at good values. So, and the market gives opportunities. So wait for those opportunities, be a little patient. There are enough opportunities in the market at this moment. But yes, long-term conviction has to be in place. That conviction might get tested in the next 6-8 months is as an observation.
I think that 2023, if one really takes a bet on either increasing the SIPs or continuing with it in the worst case scenario going into 2024, that kind of, even if troughs out, market goes further down from here for whatever reasons, at least your deployment happens in an attractive pricing. The 3-year picture could be very meaningfully rewarding.
That's the beauty of where we are today. The volatility of the market is the best friend of an SIP investor. When you get people out on your screens to give heroes or who are the best fund managers, At this moment, the only hero in the market is the person who is continuing the SIP and who will remain invested in this market will be the person who will finally end up being the winner. That's the reality, because the India story is intact. The India long-term story has only got better post-COVID. And when you get that data point picture very clear in your mind, the only person who will benefit from that data point is through the capital markets, through a person who's invested in the market. And that's a very simple way of looking at it. Remain invested, as you rightly said, add more to your SIPs, because suddenly, if you want all data points to be correct, the markets will not be right for investing. The value of the market will change completely. So it is when data points are weak that one gets value, and these are such times.
Okay. Okay, tell us just one last word before we let you go. I've been a big fan of your mid-cap, small-cap strategy for some time, and I know a lot of people, investors on the street, will swear by it. What are your thoughts on the valuations, or what is your investment team's view on the valuation in the broader market? They've gotten beaten black and blue in the last 1.5 years, much before Nifty or Bank Nifty became weak.
See, when you look at valuations, one looks at opportunities. And when you look at opportunities in the market, our house view is we see enough opportunities in manufacturing broadly. Financials continue to be valued, and you've seen the change in the financials in the last few days. There is value there which can be picked at times, and it is got on a long-term trajectory. When Nifty 50, 37% of your Nifty 50's financials just speaks of the way the market cap movement is moving in the broad market. Broadly, we feel there could be some fatigue in the consumption side, because post-COVID there has been a continuous sort of rush towards consumption for whatever reasons. But that's something which we are watching out for. Autos remain we feel there is a cyclical recovery in autos. So when you look at broad pockets, apart from IT, where we are a little cautious, we find value across markets. And what is good for the investor is also good for us as fund managers. We find that, if you can accumulate some of these at good values, which we time and again seem to get, the end result can be very different. So especially for the mid and small cap, I can't comment much on the small cap because we don't have a fund there. But especially on the mid cap side, it's a time to pull up your socks and continue those SIPs and leave it to the fund manager to find that value for you. Yes, there are some good businesses getting to be available at some good prices. So from a valuation perspective, we are beginning to feel that it is getting fairly valued. So from a global perspective, Indian markets might look a little overrated for the short run. But for the longer run, what you say is correct. The accumulation phase is definitely in front of you.
Right. All right, Swarup, good to chat with you, like always. Before we take a break, also hear out